what's the actual impact we might see from these inflows from institutional investors. Based on the information we have, inflows might not be as big as what we saw with Bitcoin ETFs. They might disappoint, but if one thing is for sure is that crypto always surprises us. So, obviously take all of this with a grain of salt. But if we look at the assets under management of Hong Kong spot ETFs, so Hong Kong recently approved ETH and Bitcoin ETFs. And what we see here is that ETH ETFs are about 15% of total AUM. So total assets under management of spot ETFs in Hong Kong is a bit over 300 million, of which Ethereum ETFs are 50 million. So about 15%. Now, in the US, total AUM for the Bitcoin ETFs without GBTC is $37 billion. Okay. And props to the blog for their great data page. Okay. So that's $37 billion of total Bitcoin ETF assets. So 15% of Bitcoin ETF assets would be 5.6 billion. So if the US ETF market behaves similar to the Hong Kong ETF market, and the ETF is 15% of total ETF assets, then in about 5 months, which is how long it took the Bitcoin ETF to get to 37 billion, we should see about 5.6 billion of Ethereum ETF inflows. But the big caveat here is that you have to take into account the outflows of Grayscale's ETH trust. Remember that Grayscale has these huge trusts, which is how institutions have so far had access to crypto. So they had GBTC for Bitcoin, and they had ETH, ETHE, for ETH. And right now, ETH, the Grayscale ETH Trust has, it has 11 billion in AUM, or almost 3 million of ETH. So what happens is that when actual ETFs are approved, institutions take out money of the Grayscale trust because they are inferior products. They have really high fees. They have this thing where the share price trades at a premium or discount to the actual net asset value of the fund, because it doesn't, the shares don't update daily. Like the fund doesn't sell or buy shares or the underlying asset of the fund daily. It just behaves differently from the actual spot ETF. And so because it's an inferior product, obviously when ETFs are approved, investors will withdraw funds from the Grayscale Trust, which has happened with GBTC. So for GBTC, it had 29 billion of assets in January, and now it has 19 billion. That's a 34% decline in dollar terms. In Bitcoin terms, it had 600,000 Bitcoin in January. Here we have this Dune dashboard, and now it has 287,000 Bitcoin in holding. So that's almost over a 50% decline in Bitcoin terms for GBTC. So what happens if the ETH Grayscale Trust has a 50% decline of ETH? That would be a decline from 2.96 million ETH, which it holds today, to 1.45 million ETH. That would be $5.3 billion in outflows, which is just under the 5.6 billion of expected inflows. Remember, we got the expected inflows from that 15% number from the Hong Kong ETFs. So, if we assume that the Grayscale ETH trust has the same percentage of decline as GBTC, and if we assume that spot Ethereum ETFs have 15% of the assets that Bitcoin ETFs have, similar to what happens in Hong Kong, then that means that net inflows for ETH, it would be just about 300 million in 5 months, which is not huge. So, that might be why ETH has been trading a bit sideways since the approval. Let's see. So definitely up. So here we have ETH just surging when we had this odds change from 25% to 75%. So ETH surged from about 3,000 to 3,700. But now it's stayed pretty much at this level between 3,800 and 3,700. So, maybe this jump is the extent of the increase that the market is attributing to the ETF impact. And maybe people are thinking we won't see as much in inflows as we saw with Bitcoin, accounting for how ETH is a smaller percentage of Bitcoin interest and accounting for Grayscale trust outflows. So that's just something to take into consideration. Maybe the actual price impact for ETH is not going to be as high. But, that's just taking into account, the different factors I mentioned before. Crypto does not stop surprising us. We might see huge inflows. The other thing to take into account is that these products are just plain vanilla ETH. They don't include staking. Actually, the issuers had to explicitly take staking out of their applications. So that might be something else that's working against these products. Investors might say, why would I want to pay fees for just plain ETH when you can get extra yield by staking ETH elsewhere? On the other hand, again, these investors don't want to deal with anything very crypto native. They just want traditional rails, which is why, they want these ETF products. So maybe they don't really care about staking ETH, but that's, something else to take into account. These ETFs do not include staking. They're just plain vanilla ETH. So that's it for, the main takeaways of the spot Ethereum ETF approval. One final point I want to make is that, for me, this is great for the reasons I said before, but to me, it's always more exciting to see Wall Street adopting actual crypto rails. So things like we've seen with the BlackRock tokenized treasuries fund, for example, is a great example of Wall Street actually using crypto. This is the other way around. It's actually bringing crypto into traditional finance. So, it's a bit less exciting to me. I think those of us who do believe that crypto is just better financial infrastructure would hope that the shift comes the other way around. Wall Street will hopefully increasingly use crypto rails because they are just better. So that's it for ETH ETF news for now. I'm sure we'll see many ripples in the market and in the industry.